Welcome back to Your Average Investor, everybody. Today we're going to be reviewing the $1,000 account challenge because this starts tomorrow. If you want to follow along, you're welcome to, but this is not financial advice. Do it at your own risk. This is just for entertainment and education purposes only. Now, if you're not familiar, what we're doing is we're taking this account at $1,000. We're going to be doing the wheel, and we're going to bring it as high as we can. The goal is to get 100 shares of SPY. Just however long it takes us, we're going to go from $1,000 to 100 shares of SPY, which right now would be roughly $52,000, but plus or minus based on what SPY is trading at the time. Here's the positions that I'm looking at right now. We're going to review these just briefly. If you haven't already, please hit that subscribe button to help us monetize this channel. We have plans to do a lot of really fun giveaways. We're actually doing a giveaway right now for $100. You can get in if you want. Go check out our past videos to see how to do that. So here's what I'm looking at. First is RIOT. I really like where RIOT and the other Bitcoin miners are from a technical perspective of building this base. RIOT especially right around $10, and they've got some pretty juiced premium on them. So the thing with RIOT is it's a little bit too expensive to buy 100 shares with $1,000, obviously. So what I would be doing instead is selling a cash secured put. And I'm looking at this 9.5 for about $47 to $50. Here's what it looks like if I do the 9.5. It's going for 47 now. Yesterday it was at 50, so I'll update this. If that cash secure put expires worthless, I make just under 5% on that play, which is a pretty dang good play for a monthly, right? 5% a month, compounded month over month. You get some compounding interest quite fast there. The problem with that though is I don't like that it puts literally 100% of my account in a single thing. Like even these ones, all right, that's 80% of the account, which is a little bit less, but that's kind of how you have to do things with small accounts, is just go all in on safer positions. So I'll probably pass on RIOT right now, but I'm going to keep watching. Tomorrow, if you know the right entry shows up, maybe I'll do it. Canopy Growth Company is a similar one. The nice thing here is if I wanted to, I could take shares of Canopy Growth Company. What I don't like though is it's in a little bit of a downtrend right now, and it looks to me like we're coming back to this 7.6, maybe $8 zone here on this volume weighted average price catch. And if that happens, there's not a good play for cash secured puts or covered calls unless that literally happened tomorrow, right? Like today we're down 5%. If it dropped another, say, 10% tomorrow and lost another 90 cents, we'd be getting pretty close to that level, but still not quite there yet. So maybe I would consider, again, cash secured puts. If I saw this drop another buck tomorrow, then I'd grab some like put 8s or maybe put 7s and collect the premium there. Of course, the premium would be much higher if this had dropped another dollar. Next up on the chart is DOMO. I really like DOMO because it's a nice tech company that's lost the favor of the limelight recently. You can see they IPO'd here at about 30 bucks a share, climbed to almost 100, and now they're sitting at about $7. I also noticed some potential insider trading on this, and I'll show you what that looks like right now. So you can see here these call 8s right here. Open interest 9,400, and then the call 9s 3,600, with volume of almost nothing today. But when I go here, let me show you what the volume looks like. Look at these volume candles. You see that big old candle for about 2,300, purchased at about 30 bucks. So somebody's buying, we'll go $30 times 2,300. Somebody's buying about $70,000 worth of call options that expire June 21st. These are only call 8, so they're just a little bit out of the money, but they report earnings. I think it's tomorrow after hours as they report earnings. So I'm considering, if I have a little bit of extra cash, I might actually go ahead and throw 25 bucks at one of these calls, or maybe even this one, the call 9 is a little more risky, a little further out of the money, but that might be a play that I go for with a little bit of extra cash. I don't think I'll take shares right now, only because the premium's actually not that good on puts or calls. And so I think there's better plays to be had there. And the premium's not good primarily because there's no volume here, so there's not a lot of buyers and sellers. SOFI, I really like SOFI. I own shares long-term as an investor, and I think basing at $7 here is an excellent entry for SOFI. But again, like with DOMO, the premium's not phenomenal. Like SOFI doesn't move like RIOT does, or like AMC is right now. And so because of that, I could snag 100 shares at I'll call it 700 bucks, and I could sell these 7.5s for about $18. And that's some pretty good premium. but it doesn't give me a ton of downside protection if SoFi goes back to like $6 a share. And on the upside, I'd be making $50 in price appreciation plus 18 bucks. We'll take that, divide that by, we'll call it 703. And we're sitting about 9.6%. So if I get exercised on the upside, right, if I get exercised at 7.5, that's phenomenal. I like that a lot. Now I could also sell the call 7, gives me a little more downside protection, and it limits my upside as well. So considering SoFi, again, maybe we'll go with some SoFi, but where it's at right now, I just don't see, I could see it moving quite a bit lower back into this $6.50 range. And so for that reason, I'm holding off for now. JMIA, on the other hand, this is my favorite one so far. And I'll show you why, primarily because of this right here. We've got a nice volume weighted average price here, and it's coming back to catch off of that. Now, historically, this last one, it didn't quite catch on. It fell below for a little bit, but then it came right back up again. And for that reason, I think that we're going to see a little bit of an uptrend, or at least some movement between 5 and 8, and have a little channel form here on JMIA. If we zoom out just a little bit further, you can see on some of these past examples when JMIA was in an uptrend, or was in at least a short-term uptrend, where it would bounce off of this volume-weighted average price for a little bit before maybe going slightly below and then zooming higher again. Overall, though, JMIA has been in a downtrend until most recently, where it did finally start making some higher highs and higher lows. And for that reason, I like the stock right now because there's some good premium in the puts and the calls. I could buy shares and sell calls, or I could just do a cash secured put. I'm leaning towards the cash secured put. That way, if I get exercised, I get a lower price than what I could get it for today, and I get that premium on top of it. So if I sold this for 55 bucks, my true cost would be about 4.95 per share, which is a phenomenal entry on JMIA. So I'm liking JMIA the most right now. The other reason I like it is, let's just say it continues to sell off just a little bit more tomorrow and hits maybe this like 5.4 zone or something like that, and I sell these put 5s instead of these put 5.5s. That only locks up half of my money, so I could do 2 lots of JMIA, or I could grab some NEO, some AMC, some big lots, maybe, like I said, that DOMO YOLO. So we're going to go to NEO real quick. NEO, very similar. It's at a bit of a low point. It looks like maybe it's recovering and going to start establishing some higher highs. But really what we're doing is we're just squeezing right now between a volume-weighted average price anchored to this prior high. So you can see, I'll pull it out a little bit here. Anchored to this high. It's acted as resistance 1, 2, 3 times, and now we've got this low that maybe it's basing off of, and we're going to have it bounce in here and act as a squeeze one way or the other. So I'm not as confident on NEO, but it is interesting, and they do have pretty good premium as well. So you can see there, 37 bucks on the cash secured put side. AMC, very similar. I'm not going to go into AMC too much. We've done a lot of videos on AMC, but excellent premium on AMC. You can see I could do these. If I really wanted to, I could go these put 2.5s for $5, right? That's not a ton, but if you do the math on that, $5 divided by 250, that's still 2%, right? So I'm making a 2% return with really, really minimal risk there. And if I were to extrapolate that out over a full year and do 2% compounding month over, or every single month, right? So if I started with 1,000 times 1.02, so 2%, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Then over the course of the year, we're going to be up about 27%. It's not quite what I'm looking for. I'm looking to go a little bit higher than that, so I wouldn't go that low. I'd probably look at these 4s or these 3.5s. 4.5 is a little too close to comfort for me, but AMC looks interesting. The other thing I like, of course, is that I can do AMC with JMIA. So I could do both of those and have it diversified in 2 positions. The last one is Big Lots. I really like Big Lots. The scary thing with them is they've got an earnings call coming up, I believe, before this would expire. This is 3747. So they're going to have an earnings call sometime within the next 30 days. I don't know if it's scheduled or not yet, but it will be within the next 30 days. And for that reason, doing a covered call or cash secured put with those 30 days makes it a little bit scarier, right? If there's a really bad miss, then, if it's a win, that doesn't matter. Like if I buy shares and sell call, that's no big deal. If I sell puts and then the price moved up, no big deal. But if it's a really big miss and I've purchased shares or sold a cash secured put, the premium on the put side is not big enough to protect me if it goes down to like $2 a share, which that would surprise me if it did that, but it is in the realm of possibility. And so I'm watching this, but I'm not super confident on it. Maybe what I do is I take a small starter position with some leftover cash, like if I did 100 shares of JMIA or something like that, and then got in a little bit of DOMO, maybe I do a little bit of BIG, but that starts spreading myself kind of thin, and right now I want my positions consolidated. So these are what I'm looking at. The challenge starts tomorrow. Again, I'm going to be posting the video as soon as I enter the trade. I'm not going to be streaming it live because I'm not set up for live streaming yet on YouTube. They require a little bit more before they'll let me live stream. But for now, I'll just be posting it literally as soon as I've entered the trade. I'll post the video, so if you want to follow along, you can. And again, JMIA is looking like my favorite one right now, so this is most likely what I'll enter. Again, this is not financial advice. If you want to follow along, that's great. That's your choice. But it's at your own risk, and you've got to be smart and decide what's best for you. Thanks for tuning in, guys. Catch you all tomorrow when we enter this trade.